Again, we're looking at the ICT mentorship for 2023, and he's covering ES, the indice. So I'll go ahead and start that. Okay, so just like we were talking about yesterday, wicks are going to be actually gaps, like a fair value gap as well. So that's going to be a sensitive point, especially if you're looking at like a higher time frame wick. So let me kind of show you if I have any examples. Yeah, so right here. So let's just say we're looking at this wick. So it's coming up. It doesn't touch it right on the dot, but it does get near the consequent encroachment. And so we could actually just measure out wicks, and uh, here's a better example right here. Yeah. So once it starts trading up into that wick, you might find some level of resistance coming through, especially near that midpoint. So you could either use it two ways. You could use it to take profit. You could use it as a possible reversal point. And basically, it's just another thing to add on to our bias. So let me go ahead and play that. Yeah, so just like he's talking about, uh, when you're first starting out, it's better to stick to one market just because each one of them kind of has a specific movement. So if you're looking at indices for instance, what we're looking at right now, we have an equity open, we have 8:30 news embargo lift. So you have like these slight little differences where if you're able to just stick to one market, whether it be gold, whether it be euro, you're gonna overall find a better edge in that, just because of the behavior is going to be slightly different on all of them, and all of the concepts obviously work across each one. However, if you're able to master one, that's enough to get you funded and get you payouts. So just like he's talking about, we have our midnight price right here. So we're gonna have our accumulation during the day, and then we're gonna find our manipulation below the midnight price, and then into our distribution for our power of three. But not only does he mention that, he's talking about right here. We have our 8:30 candle, we have our 9:30 candle right here, and then you could see after that it trades down and manipulates. And so the reason why he points that out is because uh, what the silver bullet is intended for is so that we're trading after these actual more aggressive times right here, because you don't want to get caught up in this mess. So if you're trading during silver bullet or after, like around here is lunchtime, we're gonna find a lot cleaner price movement, and especially if we already haven't taken our sell side down here and we were looking for buy side, that's what we're gonna be waiting for. So every time we make these like little lows, we just dig in, but we don't fully take out all the sell side. We're most likely gonna come back down and take out that sell side, because it's not typical that you leave just these stacked lows right here. Yeah, so again, what he's talking about are these wicks and specifically our rejection block. So let me show you what that might look like on a lower time frame. Um, Let me just find one. Yeah, so like right here, we could see a willingness for price not to want to take out this low initially, which is our 8:30 candle. And once price kind of develops over here, that's when we see it take it out later on in the day. However, there's a clear reason that we didn't want to take out this low, and it's going to be used as a rejection block, as he says. Um, I'm assuming we had some like buy side targets, which is why I didn't take it out right away. You can see it comes up and takes it out, and then it goes lower. So that's most likely why it did that. So he brought up about swing trading, like what we want to look for in terms of how are we going to position ourselves for a swing trade. And so basically, what he's saying is we should wait for us to trade above or below that midnight price. So right here, if we're going to sell, we're going to wait for us to trade above it as our manipulation. And you can see up here, actually, we take our buy side. So that was a key level because this is Monday's high. So we already know ahead of time that we were bearish because of this 4-hour gap. I also explained we had a daily breaker. But once this buy side is taken, we're going to be looking for sell side down here. All this sell side we have built up. And yeah, we would be looking for a trade up here within our manipulation leg into our distribution. And he was saying how we're not going to be looking for little trades in here, little small stuff, because we're just going to get chopped up. We're not going to get a proper price entry, especially on days like this, where we don't have much news. But you could really position yourself for the rest of the week if you're able to identify where's our manipulation, are we trading above that midnight price right here, and how can we catch the rest of that distribution. So what he's kind of going over is what he calls order flow. So we could see like right here, the candle closure we're getting right here. We trade up, we close lower, and so we see that on the bear side of things, and then also on the bullish side. And when you see this kind of price movement, even if you see it beforehand and you start seeing it up here, we could still anticipate a good entry because we have much cleaner conditions. And I see a lot of traders like ending up trading in poor conditions or over trading. And this is the kind of conditions where you want to be in. You want to be adding to your winners. You want to be just in this trade because you could see how clean the price movement is. And this is typically going to happen like on days with red folder news. So you really want to take advantage when you start seeing these clean conditions, even if you don't take the first price leg. If you wait later on, you're still going to get the same kind of price movement. Yeah, so basically the same thing I was talking about. Over here you have 8:30 news, and then once this 9:30 candle opens and our equity opens happens, which is usually where you'll see manipulation. So you don't really want to be in a trade before that. You're gonna see a lot cleaner price movement, and as he says, that's all you really need if you're trading a New York session to catch a big move, because you could see all this movement right here. Yeah, so I'll show this right now in the chart, but right here, when we come down, we see these large down close candles below this swing point. That's actually going to be our market structure shift. And you could see right here, like we come down, but we don't fully encapsulate this swing low right here. And we just come down, we hang out. So we're most likely not going to see our run yet. But once you see this run occur, and then we get back in on that displacement leg, what we're anticipating is that smart money is in this trade. There's a large money behind it, and we're going to see a continuation off of that swing low to market structure shift. And so let me show you that real quick. So today, this morning, you could see we have this fair value gap. We have this fair value gap. We also had this one. So every time we break a swing low like this, a large down close candle, That's a market structure shift. And even though it happened once right here, it's going to keep happening. It's going to keep happening until we reach our targets, right? So I actually I entered today off of this one right here. It was already 10 o'clock, silver bullet, but I still caught a trade. And yeah, if you're able to identify these small market structure shifts, you could get in on continuation days like this. Yeah, I don't know if we want to hear all this. So before he continues, so the kind of entries he's taking right here. So we took all of our sell side. We have upside targets. We have buy side up here. So he enters on a turtle soup right here as we close up above. You can see right here, there's a little fair value gap that turns into a inversion fair value gap, IFEG, as we close up above it. And then we have this fair value gap created, which is his pyramiding entry. That's what it's called when we're entering multiple positions. And then we have all these stacked highs. And really, this is a really good setup that you'll see a lot of the time, especially on the 1 minute, where you have a IFEG, you have a sweep of sell side, and then you have all these stacked highs. All right, this guy just keeps yapping. Let me show you a real chart over here. So let me go to New York session. Okay, so I'll kind of show you a similar setup from what he was showing. So let's say we have our sell side taken right here. The hour, so it's going to be 10:50. So this is our macro. So remember the last 10 minutes and the first 10 minutes of every hour. So right here, we invert this fair value gap. We create this fair value gap right here. And then we have all these stacked highs. So if you're going to be trading, if you're going to be scalping, this is probably going to be one of your best setups to take right here. So it's typically when sell side is taken like this, we actually come up, we invert this fair value gap, and then we also create a fair value gap. So that's creating a balanced price range. If it's balanced right here, we have no reason to go lower. We only have conviction to go higher. And you can see right here as well, our midnight price. Let me place that. This is our midnight price, this gray line. So we come down, trade below it. Remember, manipulate below it, and then we're going to distribute above it like a power of 3. And the same way you could have used it longing right here, you could have used it going lower right here because we do trade down below it the rest of the day. Let me remove those. Then let me see if there's any more inversion for value gaps over here. Yeah, this is perfect. Perfect example. So let's just say we're very bearish on the day because of this low, right? This was our target. So right here, Asia session, we see us trade down. We're not going to manipulate right here. Sometimes you'll see us manipulate above Asia. This is because we're extremely bearish, and we're this near to a target. We're gonna target this. There's no doubt about it. So we see continued delivery right here. And then we can find either a lower time frame entry in here. So let me check the 5-minute. So right here, we have a breaker. So we could enter right here, stop loss above this high, and then our target is down here. So we don't necessarily have to enter off of that inversion fair value gap, but it's just a good little confluence to know it's there, knowing it's going to push price lower. So yeah. Let me see if he has any more value in here. So what he's talking about is the implications of exiting early and how you could maximize your targets, because one trade might make up for your whole week of losses, or it can make your whole month. So I'll kind of show you, like, if we would have took any of these fair value gaps right here and we just held the rest of the day, right? That's a huge trade. And if you're always like exiting before your target hits, then that's going to be like an issue in the long run. And just having these large trades, they're going to let you pass accounts more. They're going to make a huge increase in your equity curve, obviously. But he's talking about just getting better at exits in general. And that's what he himself is lacking. And so just using like our liquidity down here, we could use our inefficiencies instead of just taking random exits. So we could enter at the consequent encroachment. We could enter at the bottom of it. We could enter at this low. And let me continue that. Oh, my bad. Did you guys have questions? Where would you place your stop loss if you were to take this trade? Yeah, we did get lost in the sauce. Yeah, exactly what Mark said. Um, your stop loss placement for this trade. Let me see. Right here. So you enter right here. Yeah, it's probably gonna be like down here. With these IFEG scalps right here, I really like to, like, right here at this high, I'd probably just move it to break even, honestly. Because it's a momentum play. If it's not gonna work out, then it's not gonna work out. When it comes to this kind of scalp right here on the 1 minute. Can you see the setup is correct? Oh, Bank, we're not using indicators, so I don't know if that setup is correct. But yeah, any questions regarding the chart? All right. I'll just try to skip through this because I think he's just talking. Yeah, so what he's talking about, you're gonna have a much higher strike rate, a win rate if you're taking like small 1 to 2s, 1 to 1s. But that's kind of what you need when you first start out, just to build that confidence, that conviction. Because most of the time, what people aren't missing is like they could enter on a fair value gap, but they make so many mistakes with like micromanaging or exiting early or just all these psychological issues that you bring that if you were just to exit statically at a 1 to 2 out of 1 to 3, then you'd probably have a much easier time trading. I'm probably gonna end this part right here, and I'll just show you um, what I saw to do my weekly analysis. Uh, what I sent out to VIP. So looking at this chart, the first thing that kind of pops into my mind is this is kind of creating like a balanced price range right here. So I'm not really expecting price to come all the way up here just to trade lower. So what I was expecting out of this week is we just trade up a little bit, probably take some of these highs. So right here, this was my first target that I wanted to see hit. And you could see on my analysis, I send it out. It's just like a red little line. But this is exactly what I wanted to see taken out. So right here it comes up. It's respecting this 4-hour fair value gap. And then back to our daily, I was looking at this breaker right here, which is, so we have a high, a low, a higher high. This is the lowest down close candle, and it's the only down close candle. You could see how well it closes right here. And then we also have this inversion fair value gap, which I mentioned is kind of like a balanced price range. So we tag it right here. And then we just had this very large gap during the night. I'm not sure what kind of news came out. But even if you traded this morning, it was all sells. There's still a lot of opportunity. So when you know your draw, like never stop yourself from taking more trades, from thinking like it's gone too far, because there's a good chance like you could see continuation. So yeah, this is like my main target for the rest of the week. However, it looks like we're gonna hit it. So what I'm kind of expecting is we trade down like into this daily fair value gap right here, and then we probably take out this low, trade down, and then we probably have TGIF, just because I expect this to be the weekly target. Once we hit that weekly target, we could expect some sort of retracement. So yeah, that was the analysis. And like I said, whenever we're trying to see our expansion, so we're trying to see our bearish expansion down here into this low, we're going to want it to trade up first as manipulation. So kind of think of our daily candle. So right here, Monday, this is the start of the week right here. So we want to see it manipulate and then distribute, kind of like a power of 3. So yeah, that's pretty much it. Very simple. Other than that, unless you have questions, I'm just going to end the stream. All right, you guys have a good day. Eat some protein. Do some pull-ups. All right, later guys.